It's TA with MK. It's TA with MK. Gents and ladies, no time to waste. Don't be afraid, it's time to trade. Let's start your brains like high-speed trains. Storm these games like hurricanes. It's time to save this herd that stays. Put on your cape and learn the phrase. It's TA with MK. It's TA with MK. Welcome back to TA with MK. I am McKay. And this video, we're going to talk about Fibonacci levels and how to use the tool inside of TradingView. So, let's go. Fibonacci levels. To start out, I think it's important to understand that the majority of trading is psychological, from risk management to emotions such as fear and greed, setting rules for ourselves, sticking to those rules, so much more. Fibonacci is fascinating because it's the perfect blend of psychology and mathematics. The 272, the 786, the 618, it's just numbers. Why do they work? Psychology, why do we care? They can give us an edge in trading. And that's all we're here for, to get an edge. Let's dive in. To start out, I'm on a Bitcoin 12-hour chart. We want to double click anywhere on the empty space of the screen to go ahead and hide our indicators. Also click down and drag price action to the left a bit, just so we have room out here to go ahead and bring our FIB retracement tool out and make a few changes to the settings. To start out, we're going to go over here to the left side of the screen to this toolbar here. And on the third one down, we're going to click this little arrow next to it and make sure that we are on the FIB retracement. Go ahead and click there. And then click anywhere on the lower part of your screen once, and then go ahead and drag up and to the right and click again. If yours looks more like a rainbow and nothing like this, don't be alarmed. We're going to show you some good default settings that you can copy. You should have this little icon up here. If you do not, go ahead and hover your mouse over one of these dots for the FIB retracement tool and click. That should come back up. And we're going to click on this little settings gear and then make sure we're under style. Now these are some great settings to use, so now would be a good time to pause the video and go ahead and copy everything exactly as you see here. I'll also scroll down so that you can pause it again and get this bottom area the same as well, and then we'll move on. So how are we going to use this tool? We are going to use it to find potential buying areas and potential take profit areas based on some of the most common Fibonacci levels. First, let's use it to identify potential buying areas. Here we are back on the Bitcoin 12-hour chart. I want you to keep in mind this tool can be used on all time frames as a way to identify potential areas of significance, but just like price level and trendline support and resistance, these levels are much more significant on higher time frames, and is the case with all forms of support and resistance, it's best that they are used in confluence with each other. Let's explain. As a retracement tool to identify key levels, we need to start at the low or beginning of a swing and pull to the high of the swing, or as my co-trader calls it, the boom. Observe. Now we're going to click on our FIB retracement tool, and from the bottom of this swing, we're going to click on our mouse down. We're going to drag to the top and then out to the right so we can see our levels more clearly, and we're going to click. It's important to understand that these numbers over here represent a percentage. So from the low of the swing to the high, this bounced not once but twice around the 0.5, which just means that from top to this bottom, it retraced around 50%. Let's do another swing. Moving up, we're going to go from this low up here to this high and drag out to the right and click. And from here, we can also see that it retraced back and bounced right around the 0.5 or 50%. Some of the most common retrace levels before a potential bounce are the 236.5, the 618, and the 786. This is where confluence comes in. As we can see zoomed in on this one swing high to swing low that retraced around 50%, if you look right here, this particular level, or as we learned in previous support and resistance, is a zone. It had got rejected hard the first time, but was able to break that and retest it before pushing higher. Well, then when it eventually had a bigger retrace, the 50% retrace, it bounced there once, twice, and wound up bouncing there a third time before it pushed higher. This would be confluence. Not only is the 0.5 a common fib level for a bounce, in this case, it was happening right at a support resistance flip. Now let's briefly show this tool being used to identify potential take profit areas. Keep in mind whenever the coin has previous price history at higher levels, or as we refer to it, upper resistance levels, those will always be the first areas you want to target as potential take profit levels. However, if a coin is breaking its previous all-time high, as Bitcoin did back here in early February, and is entering what's called price discovery, this tool can be useful to identify some potential take profit areas. To do that, we're just going to do the opposite of what we did when we were finding retracement levels. On retracement levels, we went from the bottom of the swing to the top. This time, we're going to go from the top of the swing down to the bottom. Of course, drag to the right so you can see your levels a little more clearly, and click down on your mouse. Then if we look over here to the right, we can see some potential upper targets. We can see that when Bitcoin broke its previous all-time high back in early February, using this exact fib pull from this high to this low, it ran up to the 1.618 fib level. Also realize you can zoom into a more recent swing to get shorter term take profit levels. This is a more recent swing before Bitcoin had broken its all-time high. We could go from this high of the swing down to the low of the swing, and this is just going to give us shorter term take profit levels. The bigger the swing, the higher the take profit levels are going to be, and the smaller the swing, the lower the take profit levels are going to be. All right, I want to thank you for watching our quick dive into how to use the Fibonacci tool to target potential areas for buying and selling. We will have future videos where we go a little more into depth with it, a little more advanced, things like the golden pocket, golden ratio, and things of that nature. But once again, thank you for joining me on TA with MK. My name is McKay, and we'll catch you next time. It's TA.